stepping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do, then just shout it loud and clear. I wanna know if you really need it. And if you do, then just shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear.
I love this video. It freezes every time I move my mouse off. But hi everybody. All right, let's get started. It's another Sunday night spectacular. It's 8 o'clock Eastern time, and it is time to get going here. I see lots of people still joining us. Good evening, everybody. Come on in, gang. All right, here they are. They're all coming online. Oh my gosh, look at all of these people from all over the place. Listen, while we're waiting, tell us in the questions box where you are from, just to get an idea of the worldwide reach that we have. Very curious as to where you are all from, and be good to know that. Just put in the questions box. You'll find a little questions box icon on your Zoom dashboard. Click on that, and let us know where you are all from here tonight. Oh my gosh, you get them all over the place. Okay. All right, while you are doing that, I have to hit the record button, and let's get started. All right, good evening again, everybody, and welcome to DayTradeSPY.com's Week-In Review, Intro to Trading, and it is May the 3rd, 2026. May the 3rd, 2026. How's my hair sticking up? Yeah, well. How's the view there? I think well, I'm showing here that let me just come a little bit closer this way the light kind of goes on there, and you find that the light is okay back there. You can see all right, and what I gotta do is get the questions box. Okay, there we go. Wow, hello from St. Louis, Houston, Texas, Richmond, Virginia, New York, Albany, New York, Whitefish, Montana, British Columbia, Canada, Nevada, Las Vegas. We got them from all over the place, folks. UK, middle of the night in the UK. All right, another one from Hamilton, Ontario, Canada. There's another one from Los Angeles. Okay, Chicago area. There's one from Jersey. All right, Florida. A couple from Florida. Right? Anyway, they're from all over the place. There's a lot of them. All right, let's get started, folks. My name is Hugh. They call me Humble Hugh. Well, I call myself that. My wife has a few other names for me, most of which I can't really kind of tell you, publicly here. But good to have you all here, folks. And we do this every Sunday night, by the way. Tell your friends. Okay. Maureen from Singapore. Good morning. Good morning to you, Maureen. Wow. Just curious, Maureen. How did you find out about us? Just really curious. All right. So, yeah, my name is Hugh. Again, let us know in the questions box if you are new to options, or if you are new to SPY, SPY, or if you are new to DayTradeSPY. It's the first time you're here, let us know, just curious. And yeah, email message. Okay, thank you for that, Maureen. Okay, all right, any questions? Yeah, we'll get to your questions in a little bit here, right? All right, so what we can talk about here tonight, we can talk about a little bit about last week, the upcoming week, give you a little 2-minute tutorial, answer your questions, have a little contest. We have some fun. And of course, here's the standard disclaimer. Excuse me, by attending this webinar, you fully understand and accept the financial risks involved in trading securities. The risk of loss can be substantial. You should carefully consider whether such trading is suitable for you in light of your personal investment objectives and financial resources. By accessing this webinar, you understand that you are not receiving any advice as to what to buy or sell, but are simply receiving information for educational purposes only. Any decisions concerning your trade are solely your own to meet your personal objectives and risk tolerances. You alone are responsible for all your own trading, and past performance does not guarantee future results. And all that said, yeah, good trading, everybody, right? That's what we say. All right. Well, I'll tell you who I am. Why listen to me? I don't know. No reason. My name is Hugh, folks. All right, and longtime trader, publicly teaching everybody since 2010. Mastered some pretty cool techniques over the years, and mostly the stuff I learned from the trenches, right? Deep in the trenches, and that's really what matters, right? That's what counts, right? Looking for short-term breakout trades multiple times daily. Just pick up a little bit of money here and there. And by the end of the trading session, you hope to have a little bit of a bag of cash, right, that you can take home with you. All right, I thrive. People ask me why you bother trading when you can just training when you can just trade. Frankly, I thrive on the success of other people. I certainly know how to make money myself, and after a while, when you make enough money, you don't, it's nice and all that, but it's not the only motivator. Everybody has to have a reason to wake up in the morning, and for me, that reason is to see other people succeed. And I really enjoy to see the feedback coming from people that say, "Hey, listen, you know what?" And all the success stories. I was struggling with this, and I finally found something that works. Thank you so much, and all these other wonderful things. Anyway, my slogan is, if you want what I have, you got to do what I do. So what happened was, we've been doing this, like you say, from 2010. And by the way, this month, I think it's actually May the 9th. I think it's May the 9th, what we are going to have, which is going to give me next week, officially going into our 17th year. Publicly trading, not publicly, yeah, publicly trading. And not that we publicly trade the company, but we trade publicly and we present publicly. So what happened was, I guess it was now, my gosh, about 3.5 years ago. Time is sure flying by. Oh my Lord. I remember it like yesterday. Eagle Financial Publications took notice, and they made us an offer we couldn't refuse, so we sold to them. And then they hired us back. That's pretty cool. Best job in the world, folks. Best job in the world. Absolutely the best. And then they brought on an old retired Eagle Financial Products guru by the name of John Johnson. Litigation lawyer by trade, turned options trainer. Highly acclaimed in the industry publications. He's been quoted many times. Uses highly effective tools to determine trades. His philosophy is very simple. Take what the market gives you. And his definition of success is doing what you want when you want. Now, he and I pretty much share the same philosophy. I take a little bit of money every time the market gives you a little bit. And we both trade SPY. And what we do is we come to the same conclusions, hopefully, from different angles. So he has his set of indicators, and I have my set of indicators. And we examine them, we narrate them, we talk about them in the trading room. Every morning, let's say every morning, we've got the longest running trading room since 2010. Like I mentioned, we're just starting our 17th year next week. God willing, we'll continue doing it. But basically, what we do is, so again, if John says, I see the market going down, and I also see the market going down based on my set of indicators. So we have a saying that when our indicators unite, our trades ignite. And that is so true, which is really pretty good because it confirms, like one confirms the other, right? Checks and balances. So it's actually pretty cool. That's exactly what happens. All right, before we go any further, just want to mention to you that we have a newsletter that goes out every Thursday. It's called Spy on the Market. Very brief newsletter. It's not long to read, but it's actually quite enjoyable and relevant, and talks about, a lot of different things, sometimes current events, sometimes different things. And it's called Spy on the Market. Very simple read, takes you only about 2-3 minutes. And to subscribe, just go to our website, DayTradeSPY.com. And when the little pop-up comes up at the beginning, just leave us your email address and you will be on board to receive this in your inbox every Thursday. All right. Now, if you don't want to subscribe or you still want the newsletter, simply go to our website, DayTradeSPY.com, and up at the top left, click on the newsletter, Spy in the Market, and you can see all the old editions just listed right there. Click on them. I think we've got about 135 or so of these things. This week's topic, no bad trades ever. No bad trades ever. That's right. Every trade is good. Okay. I think you're going to really enjoy this week's topic. No bad trades ever. All right. All right, let's move along. I don't want to keep you more than an hours. I say that every week, and then as it turns out, I keep you for a little longer. And I don't want to do that. I'm thinking here, um, bide my time, and I want to respect your time and stuff. So, okay. Okay, let me just see here. Okay. All right, so let's look at last week. Last week, well, interesting week here. SPY rose 0.12% on Monday. This is on Monday. On a mixed, cautious start. Heavy earnings week had, folks. All right, the market started to push back up here. And the rally was capped by oil prices rising as well as the Middle East peace talks stalled, impacting sentiment. Post-market, pre-market on Tuesday, market went back down, and the SPY along with the S&P. So we trade the SPY, SPY. That is the spider. That is the stock that follows the top 500 stocks. All right. So all the big names are there, and even a lot of smaller names. But all the big names are there, including the Magnificent Seven. You've got, oh my gosh, what do we have? Google, Amazon, um, let's see, Tesla, Microsoft, all the big names. You'll see all the big names there. All right. And they're all, just curious. What is the, let me just pull that up here. Magnificent Seven. I should know this off the top of my head. For some reason, I just can't think. Magnificent Seven stocks are, okay, NVIDIA. All right, let's go there. Here, Apple, Microsoft, Google, Amazon, Meta, that's Facebook, NVIDIA, and Tesla. Together, this group, all right, they comprise pretty well, I want to say about 36% of the capitalization of the S&P 500, and even more than that on the Qs. But we track the S&P 500, okay? Just give us a little more stability in there. But anyway, on Tuesday, the S&P 500 retreated about half a point from record highs as AI, artificial intelligence related, open AI focused jitters triggered a sell-off. And I am going to fix this one little typo here. Where did it go? Okay, I have to fix this. Bear with me. I thought I had this all checked out here. Focused. A sell-off in the tech sector. All right, triggered open. Okay, I think this is what. Let's take a look at this. Just triggered OpenAI focus a sell-off in the tech sector, and I want to make this a small a. My Lord, where did it go? Bear with me just for half a second. Oh, there it is right there. Okay, there we go. All right. Yes. So the tech sector pulled a lot of stocks down with it. And on Wednesday, markets ended mixed, mostly flat by the end of the day, pretty well where it started, close to where it started on Wednesday, as the Feds maintained interest rates at 3.5 to 3.75%, showing a cautious wait-and-see approach amidst sticky inflation. They didn't want to raise interest rates and create an issue with employment. They didn't want to lower them. Because obviously we have some real inflationary concerns right now with the price of oil. When oil is hovering around or a little over $100 a gallon, that's going to cause higher prices because everything has to be trucked in, right? And prices go up, and guess who pays? You got it. You and I, we all pay, right? And plus we pay at the pumps. Even though Trump says it's going to be short-lived, we all hope it's going to be short-lived. But Trump says this is the price of freedom and not having to worry about some lunatic having nuclear weapons which could annihilate us. And this is what they have no qualms about doing, some of these places. But anyway, Thursday SPY surged to record highs again, with the S&P rising 1.02% above 7,000 for the first time, driven by strong earnings. So we had some pretty good earnings coming out Wednesday and also on Thursday. Apple was a big one. Caterpillar, Google, they each rose 10% plus. Microsoft, interesting, they kicked up about 4%, but interestingly enough, Meta dropped about 9%, but still, all the other stocks brought this baby right up over 7,000, and that continued on Friday. All right, SPY hit a high of 724.87. Talk about a move. Another record high on SPY, driven by post-earnings surge in Apple and strong AI-related software stocks. Profit taking brought it back down and closed at 720.67. Now, Trump did mention something that he said, frankly, honestly, during the war, he thought the war might bring the S&P down, and actually the stock's down about 20 to 30, 40%. But that didn't happen. Instead, we have record profits still, record highs. Anyway, it was a pretty good week overall when it comes to that. We made some money. Here's a seasonal look at the charts, folks. This is a seasonal chart. Those unfamiliar with it, that blue line there is the price of SPY right now. And the red line at the bottom is the average of the last 5 years, daily close. You can see how we really ramped up here in the last little while, and hopefully it'll bring up the well, I'm pretty sure it'll bring up the average over the daily charts last 5 years. But here's a look at sort of a micro look at what happened last week and what's going to happen the week coming out here, according to the seasonals. SPY actually rose about 3 points last week. Historically, it dropped about 1 point the following week. So we're going to see if this happens again. Not really sure. But if it happens, well, we'll keep an eye on it. All right, so I'm going to tell you here what happened here. Why did SPY go up? Earnings were in the driver's seat. Strong and accelerating corporate profits, offsetting higher energy price headwinds, inflation and Fed uncertainty. It's the outlook, the next quarter outlook and the rest of the year outlook that really moves markets. I think it's the expectations of what we have to come, not just the earnings, but what they look forward to. So we have some pretty good outlooks here, especially in the tech sector and AI. And this is what's really driving markets, really moving them up. That's held up by strong economic fundamentals. They remain solid. All right, we had the GDP, that number came out here during the week as well, rebounding in the first quarter and surging business investment. Consumers continue to spend, indicating that the economy is holding up, at least for now, despite rising costs. I really thought that we're going to see a reversal on that, but it's actually not bad. And actually, we're not doing too bad. Okay, it could be a lot worse. The risk appears more balanced after that strong rally. As long as corporate earnings remain solid, investors have reason to remain constructive. There is a tug of war going on between rising oil prices, sticky inflation, and a divided Fed Reserve versus strong corporate profits, growing investment in AI, and a resilient consumer. I know it wasn't unanimous about keeping interest rates as they were the other day, but most of the Fed members did vote on keeping it where it is. So there was some chatter about raising them a quarter point. Here's a look at double-digit S&P 500 earnings growth. It looks set to continue here. Currently, Q4, Bloomberg Intelligence reported that they expected 12% year over year. It's coming in around 13% right now, and they expect it to continue the rest of the year. 15% for next quarter, 20% for the rest of the year, mostly driven again by a lot of the tech sector, okay, and AI. A lot of AI stocks are doing extremely well. All right, and here's Big Tech's AI push driving record spending. This is showing that large cloud firms, Amazon, Alphabet, Microsoft, Meta, Oracle, now collectively expected to invest roughly $700 billion this year to support AI-related build-out. $700 billion capital expenditure of these companies alone. Look at the numbers here, $827 billion into next year expected. That's huge. We don't really know if that's going to stop there or going to continue higher. So, oil futures point to higher prices into year end. December contracts are making post-conflict highs, suggesting prolonged supply concerns. We've got near-term oil prices up around $103 a gallon. Of course, this changes every hour to hour, but year-end oil prices are continuing to go up. But again, it doesn't seem to have much of an impact on stocks, does it? So anybody sitting in 401ks are seeing record profits. Okay. It wasn't that long ago, people were asking me, so, oh my gosh, the market's collapsing, the world's coming to an end. What was it several weeks ago that Trump suggested that if Iran doesn't make a deal, it's going to be the end of civilization? Wow, strong words. Didn't happen. Anyway, a lot of people are wondering about just cashing in their retirement savings. And I mean, I'm not one to dispense advice, but I told them that yes, I have long-term savings too, and I am not going to touch them because these are short-term drops and they will resume their upward trajectory probably sooner than we think. And it's going to happen fast. And I want to be there for when that acceleration takes hold. It looks like it recently had. So we're seeing record highs, 7,000 on S&P. That's massive. That's massive. Anyway, and I also did that. I also said that I'm holding on based on the fact that the U.S. Um, is, as I understand it, a net exporter of oil. And I understand from what Trump said that countries are coming to the U.S., to ports in the U.S. to fill up with oil. So anyway, that leads me to think that why should our oil go up then anyway if we are net exporters? I'm not really sure I understand that. Maybe the world price is set differently. I don't know, but we seem to have enough oil anyway. Here's what happened during the week. S&P rose 0.9% just in 1 week alone. Year to date, 6%. Again, a couple of weeks ago, this was actually in the negative. The Dow went up 0.5%, year to date 3.5%, but the Nasdaq went up 1.1%. That is up year to date 8.2%. And the reason for that is simple. The Nasdaq comprises of all the big high-tech stocks, right? And the Magnificent Seven, and collectively they have, trillions of dollars into this thing. So they're also highly capitalized and um, very volatile. So whenever something goes bad first with the tech sector. And whenever something good happens, that too happens first with the tech sector. So you're going to see a lot more movement in the tech sector and hence the NASDAQ you will SPY, which is why I like SPY. It's just a little more balanced and a little more predictable. Um, so that is the reason. And I get that a lot where people say, well, ever trade the Qs? I said, well, I like to stay with SPY. Qs has its place and definitely some potential there, but I just like the balance of the S&P 500. All right, let's see what's going on week ahead. No low news day on Monday, not a whole lot going on there. On Tuesday, we got the S&P Global Final Services PMI report, Institute for Supply Management Services PMI report, JOLTS job openings, and new home sales. Busy day on Tuesday. On Wednesday, ADP non-farm employment change and unemployment claims on Thursday. Friday, average hourly earnings, non-farm employment change, unemployment rate, University of Michigan consumer spending, and University of Michigan inflation expectations all reporting on Friday. A busy week with a lot of economic news, and volatility is going to be low on Monday, high on Tuesday, medium Wednesday, high on Thursday, medium on Friday. Also elevated volatility when President Trump speaks. Also, I should include this in here. Watch for headline news. Okay, I didn't write it in there, but we are headline news driven these days more so than economic news. All right. And I also didn't mention that earnings season is here. So let's just take a look real quick on what is happening in earnings. On Monday, I'm just going through the earnings calendar real quick. I'm just going to mention the big names here. Palantir on Monday. Let me see what else. Monday's kind of quiet. Lowe's Corporation, Tyson Foods. That's on Monday. On Tuesday, we have Advanced Micro Devices, HSBC Holdings, Arista Networks, Shopify, Pfizer, Anheuser-Busch, Duke Energy. They are reporting on Tuesday. On Wednesday, ARM Holdings, Disney's reporting, Uber, CVS Health, Marriott International, Johnson Controls. And on Thursday, we have Shell, McDonald's, Gilead Sciences. Let me see what else here. Airbnb, Monster Beverages. And on Friday, we have Brookfield. Let's see. Not too much. Nothing that's going to really move the market on its own during the week next week. But we are in the throes of earnings season, and I think pretty well all of the big names. There might be one or two still reporting from the Magnificent Seven. I'm just seeing if there is anybody here. Wednesday, May the 13th, we have Cisco Systems. Let me see who else. Let me think here. Yeah, these are the ones coming up in the near future. Nothing that is going to move the markets on the S&P 500 on its own. Okay, so that's kind of earnings for this week. I think they're going to be winding down pretty good in the next little while. But anyway, that's what we can expect, and we make money on volatility. All right, volatility is good. You don't want too crazy volatility because then prices are very high. So let's get into our 2-minute tutorial. All right, and today we're going to talk about the MACD. I don't know why, but I always think of a hamburger when I see MACD. But hanging around McDonald's too long. Moving average, convergence, divergence. A big name for kind of a simple concept. All this does, the MACD measures trend following. It's a momentum oscillator. Helps identify trend reversals and momentum strength. And that's all it does. Okay, we actually don't even really look at this too much with our short-term breakout trades, but it's nice to see this going in the direction that you want to go before you embark on a trade. Now, the MACD line itself measures the difference. Okay, I'm going by the standard default MACD that you would pull up on your charts if you were to use the MACD, which is what we have on our charts, and that gives us the 12, 26, and 9 exponential moving averages. All right, so the 26 and 12, these are the exponential moving averages, and the MACD measures the difference between the 12 and the 26 EMAs, exponential moving averages. I'll show you in the chart a little bit. There's also a signal line, which is a 9, and that is the average crossover line. So it'll take the average of the last 9 bars, closing prices, and so if you're looking for a crossover, that's the line that you would have in there. And the way you would look at the signal line crossover is that it gives you a buy signal when the MACD crosses over the signal line, and to sell when the MACD crosses below. There's also a zero line in there, and this is where the signals signals bullish momentum and under signals bearish momentum on the zero line, and when it's actually at the line, it is actually trend neutral. And I'm going to show you that on a chart itself. Now, this upper part, obviously the candlesticks, this is SPY, or it could be any chart. And now I've got the green line here is the 12 EMA, and the red line is the 26. So the faster line is going to be your green. So what this is, the EMA, exponential moving average. So where the line is, and this is worthy of an explanation. Sometimes people don't understand what an EMA is versus an SMA. EMA is exponential moving average. SMA is simple moving average. So where the points are on the green line, this example, That is the closing price average if you go back 12 candles, right? Right there. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. If you go back and average, that's where the average would be. But a little bit different. It puts more weight on the candles that are closest to that point there. So in other words, it'll give you, 11 twelfths. It'll consider 11 twelfths in the average, and this one closest to it. And then 10 twelfths, 9 twelfths, 8 twelfths. So it's putting more weight on the candles because it's more relevant on the ones closest to where it is on the line right now. So this gives you an idea of momentum here. The red line is the same, but it goes back 26 candles. It's a slower line, okay? So it gives you this change in the momentum. It gives you the change in the trend momentum. Now, simple moving average gives you the point, but it gives equal weight to the candles going back, the closing prices of the candles going back 12 or 26. All right. So this is a simple moving average. Now down here is the MACD on the bottom. The green line is the MACD line itself. The red line is the signal. So when you see the green line crossing the red line, that would be a signal that you're going, the momentum is changing to the upside. And if you go up to the bars up in the candles here, you'll see that of course it continues to go up. And the purple line is the zero line. By that I mean it is trend neutral. So if you were to draw a line straight down, see how the green line and the red line cross over? It just seems to be a little bit delayed here on the MACD. Maybe there's just a slight delay, but it should be pretty well at the same spot where the MACD crosses the zero line. Again, I think it's off by one candle on this one here. Must be some sort of a delay on the MACD, but regardless, when you see the green and the red crossing, that is zero neutral when it comes to the 12 and 26 moving average trend neutral, I guess I want to say here. Now, I don't follow, okay, so I've got the standard default MACD out of the 12, 26, 9 settings, but the EMAs that I have on my charts, I have a 10 and a 20. So my green is actually a 10 and the red is the 20. So I find those to be relevant, but I use the standard default 1226 on my regular MACD. So I hope that makes sense. And here it is right there. We see where the trend neutral as it's crossing. All right. All right. So yeah, I think I kind of covered that off pretty good. All right, we're going to get some questions a little bit. Okay. So what we are doing here, the 2026 goal, this is where we're tracking all the trades in the trading room. And we are recording as if only you are buying 5 contracts per trade. Okay, so it is anybody who's following along, whatever we narrate, and you want to follow along with us, and we discuss our trades in the trading room. So just buy 5 contracts, and all the trades in the trading room, we are recording them all. And this is what the current your profit should be, excluding commissions. $13,665 right down here, and that is starting from early January. So you are able to pick it up from anywhere if you want to. Obviously, you're gonna pick it up later in the group here, and we have some losses in here. This last week we had a loss of 475. Another one here for another 475. So you can see that we are actually tracking them all in here very nicely. All right, so it's coming along pretty. We got been doing a lot of trades here in this last week here. How many trades did we do? Oh my gosh, 2, 4, 6, a whole bunch of trades anyway. So both John and myself. All right, and these are the trades. All right, so what do we have for you? Well, I'm going to tell you something. You should probably be part of our programs. I know a lot of people sit in the bush. They don't know what to do. They get into this Sunday night to get all the free stuff, but the real guts of what we do happens in real time during the week, during the trading days, right? And everybody should be in the trading room, and not the trading room, well, that too, but the inner circle. And I'll tell you what, in the inner circle, we actually do the heavy lifting. All right, we actually do the heavy lifting. And what happens here is you get a morning market analysis. John gets up very early in the morning. He's in Texas, so he's in Central Time. So he gets up even earlier than everybody else on Eastern Time. So he gets up very early, and he checks all of the news feeds, Twitter feeds. Oh, sorry, X, whatever it's called now. He checks all the different feeds, all the different news items. He's got some pretty good inroads into what happens out there. Now, we're not that smart to determine what happens a year from now, or 6 months, or a month from now, or even a week from now. As you know, the market's changed moment to moment. I never would have thought a week ago that we'd have been seeing, record highs. In fact, several record highs this week. Okay, but John puts it all together, and then he sends it to your inbox just after 9 o'clock, just around 9 o'clock. It's called the morning market analysis. You'll also get a follow-up report later in the day as to what we actually did. Okay. Now, John writes them on the days that he hosts the trading room, which is Tuesdays and Wednesdays, and sometimes other days. And I do them on Mondays, Thursdays, and Fridays. Admittedly, John is very he likes lots of words, so he'll be very very thorough with his analysis. Okay. You'll also be invited to our Wednesday night interactive meetups. These are recorded for later review. Ask him anything, and he'll answer. Okay. Concise, informative, all you need in one report. Ladies and gentlemen, we do the heavy lifting in the inner circle. But here's the key. This thing costs you next to nothing, $2.99 a year. Now, you work this out, works out about $5.75 a week, and I don't even think it buys you a cup of coffee a day. And if you don't think we're worth a cup of coffee, just skip this. You're dismissed for the night. You don't have to stay here for the session. But I'm going to tell you, at this price, everybody should be in the inner circle. Even if you use it once a week, it's still a bargain. Inner circle. Now, you can click on these QR codes or wait until the end of the session, at which point I'm going to present all the QR codes anyway, and therefore you're not going to miss anything, all right? In fact, a lot of people, what they do is they get all the QR codes at the end of the session, and then they will make whatever subscriptions, subscribe to whatever they want. Some people just like alerts. For whatever reason, they're busy in the morning, they're working, they don't want to be bothered with analyzing anything. They don't want to come in the trading room. They don't want to learn. They just want to fish every day. For the longest time, I resisted this. I thought, no, you should learn how to fish instead of us giving you a fish. But that wasn't the reality. And you know what? I get it. I get it. Some people are busy with their everyday lives. I have a lot of doctors, a lot of professionals, even lawyers. We tease John all the time because he is a lawyer, so we always have the lawyer jokes. We have a lot of people who are actually very busy. Recently, we had some accountants, and I heard from them, and I said, I can get in there and I can place a trade. This is tax season, I don't have time to sit through your trading room. Okay. I just don't have that time. Just give me the alerts. Give me the alerts. So the DayTradeSPY signal is an alert that goes to your cell phone 3 to 5 times a week based on an algorithm. And it's algorithm based, sent to your email and cell phone. So you get the text and immediately flip over to your trading platform and buy. Just buy. So we send you a very specific option, SPY, whatever it is, the specific strike price, call, put, whatever. I mean, it's the code itself. We send you the code, get the code on there, make the buy, and then immediately put it for sell for a 5% profit target. If it is not sold by 4 o'clock Eastern time, simply sell it at market close. Now, those people that know how to trade, every now and then you might get a loss on this one, but chances are if you've gone through our course, you know what we're doing, you don't mind holding it overnight. And those people that do that, sometimes if it does take you to a loss at the end of the day, maybe you might want to just hold on to it. But because Eagle insists that we close out all of our trades by the end of the day, we have to show, we have to report whatever the closing price is by 4 o'clock. Okay, so sometimes our reporting is not going to be the same as what you would do, right? Folks, the signal is only $14.95 for the year, or $3.99 a quarter. Now, $3.99 a quarter, that works out to, was it $133 a month, or it works out to roughly $30 a week, $31 a week, or roughly $6 and change a day for a particular option that we had determined through our algorithm system that works very well. Pick of the day, very similar, except you're going to get the pick in the morning by about 9 o'clock. That's when we email this to you. And this is not algorithm based. This is where John and I get online every morning and we hammer out our analysis and pre-market, determine whether the propensity is to the upside or to the downside with calls or puts. And that's what we submit to our subscribers just after 9 o'clock. And this trade is meant to be purchased at the market open. Now, if, say, it's a call option and right at market open, you see green candles on a 1-minute chart going to the upside, pressure to the upside, buy it then. If you see red candles, pressure to the downside, hold off until that candle starts pressuring back to the upside, then buy it. You'll get it for a better price. Immediately put it for sale for a 6% gain. And again, if it's not sold by 4 o'clock, sell it at market close. And you'll find that this too, again, for the same thing that I mentioned earlier about the reporting at the end of the day. And again, a lot of the people that if it shows a loss at the end of the day, you just might want to hold on to the next day, because people are finding that there's enough time on these options, so you're not going to lose much data loss. And most people that do that, they end up doing quite well with it. Again, $3.99 a quarter, $14.95 a year, same as the signal. So these are two individual alert systems, independent of each other. All right, and you can have, and a lot of people subscribe to both. And the pick might be, say, calls in the morning, but so you'll get a signal later in the morning to the downside, and that's perfectly normal. You can have opposing trades. That's not unusual at all. All right, so you might want to give them both of these. And by the way, the signal only happens in the morning. It's not like you have to hold on to it in the afternoon as well. If it is not given to you by the morning, then there's not going to be a trade that day, according to the algorithm that's set up for it. Folks, the trading room. This is our piece de resistance. Is that how you pronounce that? Piece de resistance. Cherry on the top. I don't know. This is our masterpiece here. Trading room. All right. Every morning, real time streaming live as it happens. As it happens. John and I host this. This is what we do. This is not something we do on the side. This is what we do. We trade. We've been doing this for a very long time. And together we have over 45 years of market experience. John comes from a long lineage of trading background, and so do I. And I don't know, probably close to 50 years. I started trading a long time ago. Anyway, I think we've pretty well seen it all. John and I have seen all the ups, all the downs. We've lived through the 2008, 2009 meltdowns. The latest, the wars. We've traded, we lived through several presidents. Probably more than that. Anyway, the trading room, it's great. It's interactive. You're able to submit your questions online in the questions box. We answer them. You're also able to submit your successes and challenges, so we look to address them. Learn and earn. This is actually meant as a training venue, right? Fully narrated. This is where our strategies come alive. We have several that we use. Typical bread and butter strategy for those little short-term breakout trades. We have our OMG, which is short for out of the morning gate. Different strategies, our short-term scalps, whatever we do. Every morning, 9:20 to 10:30 Eastern time, we do not monopolize your whole day. I don't know if you've been in any other trading rooms, but somebody, and I have, and I think John probably has too. But I've been in trading rooms where, oh my gosh, maybe 20 people have access to the narration, and whoever is the most charismatic person grabs the mic, and they are the ones who will sort of dictate where the whole group goes, where everybody else goes, because everybody relies on them, right? and maybe Tony says, sell, sell, sell. So everybody jumps in and sells. Well, maybe Tony doesn't know everything. I've had a situation there where that's exactly what had happened. And I don't know how many people were online, but everybody sold and dumped their stocks because the stock was going down at the time. And one gentleman, Mike, he stayed with it. He never sold. In fact, he held on, and a couple minutes later, he says, well, guys, guess what? I didn't sell, and I'm making money now because the market reversed right away and went up. You don't want to have that, folks. It's not an open mic session. Our trading rooms are not open mic sessions. They might not like that because, you want to kick in your 2 cents. Well, no. We are here to train people. We are the professionals. Not to say you're not good. Of course, you probably are. But when you have too many people, what's that saying? Too many chefs spoil the broth, or whatever that saying is. So we don't have that. And it's for that reason, that trading room I was in, that never worked out. It dispelled very soon after it started. Because you'll also see a lot of times people would be, sort of away from their microphones or their trading rooms for a long time, and somebody comes in and they would just chime in suddenly out of the blue. Well, I just sold. Well, I just bought. We're looking at all kinds of different things. Anyway, they don't work. And we don't want you having to be tied to your trading platform or to our trading room, all day long. This is not that. This is set up as an event and a training event. Anyway, every morning, 9:20 to 10:30. I'd be down to death, didn't I? If you can't make it, it doesn't matter. They're recorded. Right away, record them, get them to you quickly, and check it out later if you want. Folks, $24.95 for the year, $6.99 a quarter. Basically, what amounts to I think it's like a half a Subway lunch for one of us, John or myself. What a deal! It's a real good deal because you get to actually ask questions, get them answered. You get the tutelage, mentorage of two professional traders, literally in your back pocket on this one here, where you can actually ask them questions. This is the best value. And by the way, some people say, "Well, I don't know anything about trading, and I don't know if this is for me or not." And I ask them, "Well, do you know what calls and puts are?" And they say, "Oh yeah, I'm good with that." Oh, good. This is where you need to be. If you don't know delta, theta, it doesn't matter. Volatility, it doesn't matter. We'll teach you all that stuff. This is where you need to be. And guess what? We don't want anybody shy of asking questions, because chances are, if you have a question, there's 10 or 20 or 50 people behind you, excuse me, wondering about the same question. So you're actually doing a lot of people, excuse me, you're probably doing a lot of people favors asking that question. Now, here's the kicker. And this is what I know everybody loves this. Me, nah, not so much. I was never in favor of this, but you know what? Ego is, and that's fine. Because I think that if when 2 or 3 days you don't know what you're doing, or you don't know if this is for you, uh, you know, we don't want to be just giving you the keys to the castle for a month and then you're off, right? Besides, it doesn't work that way. If you want to be proficient, you need to be in the trading room for a very long time. I mean, that will make you exceptional. We have people in the trading room who've been there for years, and they're knocking them out of the park, knocking them out of the park. Winner, winner, every day here. Winner, 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 winner. It's almost embarrassing. But folks, listen, come into any of these programs. If you don't like it, if you find it's not for you, you get a money back guarantee within 30 days. I mean, how cool is that? How cool is that? So you have nothing to lose, and I would say give it a try. All right, there I am. Let's get to some questions. Okay, what's your take on the investor's slogan? Come May, stay away. Right, sell in May, go away. You hear this a lot. Okay, let me explain that. Sell in May and go away. This pertains mostly to investors, because from a seasonal standpoint, come the summer, people, they they cash out. They go back to cash. A lot of the big boys rebalance funds, different things. So you tend to see a pullback, a seasonal pullback for the summer. It's a weaker trading. A lot of traders are on vacation, right? But it doesn't matter for us. You see, here's the irony of this whole thing. We are traders, not investors. So it doesn't matter whether the market's going up or down for us because we are doing very short-term trades. If the market is going down, we determine that very quickly and we make money to the downside with put options. And that's actually really cool. And we can do that. Okay, we can do that. So we don't subscribe to the sell in May and go away program because every day and all last summer and the summer before, we kept making money and making money, going both up and down. And by the way, we're looking for short-term trades, right? So maybe the market might go down, say, from the beginning of the week to the end of the week, but in between, markets don't go in straight lines, they zigzag up and down. We do short-term trades, breakout trades. If we see a little push to the upside, we'll grab a scalp to the upside. If we see to the downside, we'll grab it to the downside. Okay, that's what we do. So ignore the sell in May and go away slogan. Does not apply to us. All right, Scott. Scott asked, signed up for the pick of the day last week. Haven't received any confirmation, email, receipt, or any way how to use the service. Okay, the pick of the day, I'll tell you here now. First of all, you probably will receive it. If you have not received any confirmation on that, contact customer service at DayTradeSPY.com. Customer service at DayTradeSPY.com. In fact, what I'm going to do is take your snapshot here and forward this to customer service for you. All right, and let them know. However, I will explain to you how to use the pick of the day. So this is going to arrive in your inbox. And if it doesn't go in your inbox, check any spam, promotions, or other boxes that it may have fallen into. All right, make sure your firewalls and whatnot allow our emails to go through. We send them, but we can't guarantee you're going to get them. That's kind of on your end. And if you do not get them, contact customer service at DayTradeSPY. Find out where's my email. Maybe there's a glitch somewhere. But anyway, when you get the email, again, it's meant to be purchased at the market open at 9:30. Now, again, if the stock is going against you, wait until the 1 minute chart. Take a look at your 1 minute chart and take a look and see. And as soon as it turns back in your favor, then get in. Now, every now and then, all right, because we send this out a half an hour roughly before the market opens, a lot happens in that time. Every now and then, you might get several minutes going the wrong way. It doesn't mean the market's, it's not a trade. It certainly is. Just wait. You might have to wait 3 or 4, maybe 5 or 6 minutes before it goes back in your direction. Get in at that time or get it for a better price. All right. Now, sometimes what happens is this. Let's say it's a call option and the market opens and right away starts shooting up and up and up real fast. And you're having trouble getting it. By the way, we use limit orders. Okay, I don't like to use market orders. We use limit orders. But if you put it up to purchase at, say, the bid price, or no, sorry, the ask price, right? And it comes back, oh, you didn't get it because the ask price is going up. And then you put it in for the next ask price, which is higher, you still don't get it because it's going up. Here's the trick. You want to get to the front of the line. So, and I know it's counterintuitive, but let's say the ask price is, I don't know, $3, right? The bid is, $2.95, the ask is $3. Well, put your bid up for 303 or 304. I know it's higher than the ask price, but what happens is it puts you to the front of the line and you grab it. And now as it's going up, you're riding the wave to the upside. Okay, it works very, very well. Sometimes people ask, well, how did you get this option? I didn't get it. That's how I do it. All right. I always go up. Also, that practice tends to push the stock up higher and the price of the option higher. So, all right, let me see here. Okay. Okay. My high school economics teacher, that's from John, told me in the late 60s in class that there are 3 stats that drive long-term stock prices: EPS, EPS, EPS. That must be earnings per share. John, maybe back in those days, that's what it was, because we didn't have the speed of the data back in those days. We may not have even had the charting or whatever. Maybe the charting, if there was even charting, was done by hand. I don't know. Back in the 60s, I don't think we had the computers, excuse me, that we have today. And I'm just going to pull up the date of the first PC. Just when was the first PC released, right? We're looking at the first personal computer, Ken-Back 1, was designed and invented by John Blackenbaker back in 1970. It was first sold in early 1971. Designed for educational purposes using switches and lights, predated the widespread popularity of computers like Apple. Remember the Apple Lisa? Wow. History of personal computers. John, back in the 60s, we didn't have personal computers. And so it was tough to get that data as fast as we get it now. And I remember back in those days. In fact, I remember back in this would have been the 1980s when I would trade, and I wasn't really trading. I was just buying and selling stocks, and I would have to call my broker and go to the office and set up an account. And okay, well, what would you like to buy? Well, I'd like to buy 10 shares of this company or that company, and I'd write them a check, and the check clears, and I buy the stock. It wasn't like it was now, but it's no longer earnings per share. No longer earnings per share. So, okay, another question here. How is algo trading systems affecting day trade SPY profitability going forward? Any plans to integrate AI into trading programs? I looked at AI and I tried to get AI. AI is very non-committal to where the stock is going. I don't believe that AI knows with any high degree of accuracy where the stock is going to go. At least I have not been able to determine any of that. So I would not rely on AI because the market is the market and it changes, right? So if everybody was, let's say AI said something, it's going to go up, and everybody jumps into it, well, that in itself is going to push it higher. But I've never seen AI to actually deliver those kinds of results as to where it's going to go. It talks a lot around, the market and what's going on now. It'll give you some numbers about earnings and stuff like different things, but it doesn't have that predictability, that foreseeable feature. So, but as far as the algos system, what we have now is actually pretty good, and we use a lot of technical analysis in there. So those technical analysis indicators are still going to continue to work on those. So, any news about zero date expiration scalps? Bill, the jury is still out on that. So what we're talking about there is possibly extending trading room hours to incorporate zero date expiration trading. But I know that the powers that be at Eagle said, well, that's not what we teach. We look at safety and and further out expiration. So they're a little reluctant to go with the zero date expiration on that. Okay, that's more for seasoned traders. So we don't want to bring in the novices into that world because it's very high risk, and the last thing we want to do is see people blow up their accounts. So I would say right now that's probably on hold. Okay. Okay. What is the point of predicting the level of volatility of the market so we can advance? It seems to me that elevated volatility is given these days. We're just kind of trying to see what kind of markets we can expect in the coming days. For example, on Wednesday we had Fed Reserve, right? We also had, I think, oh my gosh, with Microsoft, Meta, Amazon, and Google reporting earnings. These are big names. There's going to be a lot of trading, a lot of activity in those days. It's just good to know, right? It's really just good to know what kind of volatility in the market are we expecting, and how is that going to affect our trading. I told people in the trading room that with the Fed Reserve coming out, I probably don't want to be in any trades at that anywhere coming in after, say, 12 noon. Because, as a rule, you tend to see some weird stuff going on from around then into the 2 o'clock when they issue the Fed Reserve the rate announcements, interest rate announcements, and then you see a lot of wild swings going on after that as they discuss the outlook for the coming weeks, months, right? A lot of great stuff is there. So, next question here: how much is each trade on average? Are you asking how many contracts, Michael? So, John and I, we trade our own real accounts. but we do not disclose how many contracts we trade or how much money we're putting in. And the reason we do that, now I used to do this a long time ago. I said, well, I'm going to buy 50 contracts or 100 contracts or two contracts or three contracts. And I found that that really served nobody. Because those people that would be, let's say I'm trading 100 contracts on something, the people trading one or two or five contracts, they would be seem a little intimidated or whatever, say, whoa, my gosh, I'm not in this league. I'm out of here. Yeah, I'm out of here. And then, of course, they disappear. That wasn't good. That wasn't fun. And then the people that were trading, heavy, if I was to come on and say, "Oh, I'm only trading three contracts," they said, "Well, what am I doing? Taking instructions from this this neophyte who's not trading. He's not putting a lot of money into this trade." So um, I never really won, and nobody won, and it doesn't matter. What matters is what your situation is. You might be comfortable trading five contracts or 50 contracts or 1,000 contracts. We just identify what's probably going to happen in the market. That's what we do. So, and frankly, if you make, say, 2% or 5%, we're just as excited whether you have one or two contracts in that trade or whether you have one or 200 contracts. Okay, that's what's important. So, for that reason, we don't discuss that. So, all right, let me see. Is there a place I can download all the trades for the year? I am not aware of a place we can download the trades of all the trades that we had done in the year, James, and nor will it serve you because what happens there is what's the point? What's the point? Are you looking to see where we had losses? Well, I think we're averaging very high 80s or something, or low 90s of our success rate. Um, so I don't really see the value in that. All right, our average is very good, very high. I want to say the high 80s, maybe low 90s or something like that. So, and I think in the trading room we're up around 93, 94%, something like that, maybe 95%. I'm not really sure. So, but anyway. Yeah, and really the market changes all the time, so we have to change our strategy, our approach, I should say, not the strategies remain, but sometimes you have to tweak things, and we show you how to do all that too. So anyway, folks, you know it's 9:01. I don't want to keep you. So what we're gonna do now, I want you to put in the questions box a number from 0 to 1, sorry, 1 to 100. This is time for um, our contest, all right? And the winner, so the person closest to the number that's going to be drawn by our DayTradeSPY random number generator is going to get the free ebook, um, Tips, Tricks, and Traps. Tonight it's going to be Tips, Tricks, and Traps. I'm going to pull up the random number generator. This is not the number, folks. This is not the number. This is from last week or something, okay? Just ignore it. Oh, I just lost it there. I think what I have to do is oh my gosh, here it is. Okay, this is here. There it is, random number generator. Okay, I'm gonna pull up the random number generator, and this is not the number, so I'm gonna give you about 20 seconds here to punch it up in the questions box. Okay, punch up your guess in the questions box. The person closest to it is going to get the ebook, Tips, Tricks, and Traps. If there is a tie, you both get it, or three or four, how many people get it. So. Question here from Maureen. In the meantime, as I ask the question here, how many types of indicators are you using? All right, in the trading room, so I have my set of indicators. Now I'm not going to reveal that. That's all proprietary in the trading room, but I've got a handful of indicators, and John has his handful of indicators. What we've done was we have over the years and decades, we have looked at many indicators. We have tried so many, but I can tell you in my experience, I have pared them down to only what works for me. I don't have like dozens of indicators and I'm waiting for all of them to fill or give me the indication because by that time it's the end of the trend when it's no longer my friend and that's not good. So I have pared down, in my case, just the indicators that work for me and just a small handful. And when they line up, I get into the trade. All right, another 10 seconds and then we're going to cut off the cut off the thing here. Sorry, Matthew, if you want to give me a legitimate number, 1 to 99 does not qualify. It has to be a one number, Matthew. Nice try, buddy. Give me a real number, Matthew. Punch up your number right now. All right, 5, 4, 3, 2. Okay, 1. All right. Okay, Matthew. No, come on, buddy. No, no. Okay. All right. So I am going to hit the button, the number right here. Going to count down 5, 4, 3, 2, 1, and the number is 26. Let me take a look at number. Let's see who came closest to number 26. Wow, we've got so many people here. Daniel 17. Oh, Rady 25. So 25 is the closest so far. Carl 26. Oh my gosh. Okay, we have a number 26. Carl. All right, Carl B. Carl B hit the number right on the market 26. Congratulations, Carl. Okay, wow, that was very good. Okay, so sorry, Rainey. All right, well, let me see. I think we are pretty well. We're pretty well at the end of our line here, and I did keep it down only 9:05. Wow, that's pretty impressive. Thank you for joining us, ladies and gentlemen. Here, the subscribe. Oh, by the way, here, there's another little video. I don't know if you've seen the video or not. This promotes the pick of the day, but it's actually an interview with John and myself. It's kind of fun, lighthearted. Click on the QR code, grab that, and just enjoy the video. Folks, it's been a pleasure. We'll see you next week, hopefully in the trading room on World. Good night, everybody.
And if you do it, just shout it loud and clear. I wanna know if you really need it. And if you do it, just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, don't play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it. And if you do it, just shout it loud and clear. I wanna know if you really need it. And if you do it, just shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear. Loud and clear. Loud and clear. Loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what